Good morning, everyone, and welcome to the Quantum Leap pre-market morning analysis and trade plan setup for Monday, July the 7th, 2014. Hope all our American friends had a wonderful 4th of July weekend. Hopefully it didn't get too far out of hand. For those that are visiting us new today, my name is Doug McKay. I am the founder and head moderator of Quantum Leap. Quantum Leap is not a commercial venture. It is a private group of traders. We've had a Skype trade room, a chat room for coming up on 5 years now in a couple months, and we are a self-organized learning environment. If you want to come and join us and check us out, you can give me a Skype contact request. You will need a Skype account as long as, well, for the next little while until we get the new website up and running. But you can send me a Skype account, a contact request at Doug_McKay. I'll be the one from Windsor, Ontario, Canada. Or send me an email at d.mckay@stealthtrader.com. Each morning we come together into this live go-to, and I go through my analysis. I do go from the macro to the micro. I go through a normal pre-trade routine and look at the key numbers macro to micro, then look at the trends macro to micro before I get into more in-depth analysis of the profile and set up my levels and my hypotheses for the day. So if you're watching this on YouTube after the fact, you might want to skip ahead, but as traders preparing to trade this market, we do not skip anything. We go through the same morning routine every morning. Of course, we got to take care of all these silly legal things. So let me do this. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions made. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to financial situation or risk capital. Should be used when trading futures or options. Investors could lose more than their initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence and your own trade plan. Okay, before we get going, I just want to point out, I was doing some homework last night, and it's not the greatest pattern, cup and handle pattern, but it should be brought to our attention. There's your cup with a elevated right rim. What I do like about this is it came right down to the 61.8 retracement level, validated the pattern, and then came up and broke above the right rim, and we're currently holding about above the right rim. The measured move on this is all the way up at 1204.75. So just keep that in mind. The pattern does not get invalidated until we break back below 1936. This is a daily pattern, so this might take some time to play out, but it is a good measured move up into 1204.75, which for those that like trading cup and handle patterns, which I do. All right, so looking at the key numbers macro to micro, of course we've got the year high and our prior month high at, I'm sorry, it is our month high at 1978.25, the all-time high. On the ES, that is still a target to the upside. Our key level on the macro is going to be this 1954.50, which was the month open in July. Nothing really on the macro numbers from there, so let's take a look at the micro. Of course, Friday was a holiday session. It was not a full session, so we were anticipating just a lot of chop and sideways action, and that's exactly what we got. But in the Globex, we opened up at 1977. You can see the trend is still accelerating to the upside here. Our Globex high was 1977.50, then we had a low of 1974.50, and we opened auction in range at 1975.75. And basically, we just chopped around there. No need to even go through all the numbers because we only traded up till 1 o'clock Eastern time. The IB break, we did break inside of the pocket. But we don't really calculate the value area high, so we're just going to skip right over that. So let's go right into the daily report. News today, we had Canadian building permits that just hit about 15-20 minutes ago. The only thing left really for news today is the Canadian IV PMI, and that's at 9 Central, 10 Eastern. There was no COT report put out, Commitment of Trader report, on Friday, so we don't need to go through that. Howard's going to watch to see if it comes out today, and then we'll talk about it tomorrow. So let's get right into the trend and see where we are within the big picture. You can see that the monthly trend is very strong. Got a bit of a technical gap going on right here, but we've got great slope and separation on the monthly. Trend is intact on the monthly. On the weekly, same thing. A little bit of a technical gap. Good slope and separation against the 9 and the 20, and the trend is very much intact on the weekly. On the daily, we've got this technical gap, and I want you to pay attention to this, because at some point in time this week we're going to close this gap either through sideways consolidation and the 9 EMA catching up, or through price and time and coming down and meeting it. Right now, today, to get close this technical gap, we're likely going to have to come down into this 1965-66 level. But the trend itself is still very much intact on the daily. Good slope and good separation. So this trend has not been violated as of yet. Let's go over and take a look at the geometric chart. We're looking for that energy point on Thursday. We got pretty close to it, didn't quite hit it. It was at 1980, 150, 82 area. But the key is that we're currently trying to stay inside of the intermediate upward sloping fork upper line, which is this line right here, and we're currently trading below it. A retest of that line today will take us back up into 1975-75. But if we continue to stay below, we are likely to come down and test the short-term upward sloping fork, which is right here, and the lower line to that, a retest of that, is going to be that 1966. You can see that would also close the daily tech gap as well. If we do get above the 1975-75 level, and break above the upper line, look for a test of the middle line of the long-term upward sloping fork, and that would give us a move up to 1985-83 area. Taking a look at the intraday trends coming into the RTH session. On the short term, we just closed that technical gap from Thursday session and on Friday, and then we've broke below the 9 EMA, come down and tested the 20 SMA, but we have not broken below it. So the trend is still intact until we get below this level. So watch this 1972.25 on the 4-hour. Looks like we're going to get an MA squeeze right here and then a decision point is my thinking right now. Going down to the 30-minute, you can see that we do have a trend going on in the 30-minute. We do have a technical gap right here, likely to close that gap and test the 1972-73 area to close this this technical gap. Actually, it looks like it could be a FUBAR Mr. Sneaky technical gap on the 30-minute. So keep an eye on your 30-minute chart coming into this RTH session. Going down to the 15-minute, basically the same thing, start of the trend, bit of a technical gap, likely to close that tech gap in around the 72-73 area. And then that'll be a good key on whether or not we reject off of this going into the RTH session or close above it to come up and close the gap against the 20 SMA up around 74 area. Going down to the 5-minute, we've got this trend that was coming down, but we've halted the trend, and we're now consolidating sideways, and it looks like we're going to get an MA hug here. So really not a lot. I mean, you got some trends on the larger intraday time frame, but they seem to be abating and consolidating. So really not a lot of information going into the market. Let's take a look at the big picture then. Oops. Oh, I've just closed out my composite. I gotta just open it up again, sorry. There we go. All right, so we had this consolidation, okay, and a shift of the microcomposite that went back to that 0526 day. We accepted the value higher. They jumped out of, or they broke out of balance, and they came up and they accepted value up at 1967.50. Once they accepted that value, they gapped up again, and we came up and went and made all-time new highs up at 1978.25. Sellers stepped in. Currently, right now, the Thursday, Friday VPOC is above us, and we're seeing some weakness coming in here. This could be sellers stepping in to hold us down. And the key level that you want to watch today is between this, well, you got the CLVN at 72, but it's really the 71 that I'm going to be watching. 71 is the CLVN below the 2-day range low at 71.25, and likely to come down there if we break out of this 2-day balance, come down to this at least in the 69.50, but I'm watching the 67.50 to come back to where they last accepted value to see if we can find buyers with more conviction. Just below that, you've got the value area high, value area low, I should say, from that balance around 67.50 at 65.25. So watch that. Key level that we need to hold is 64.25, because we float below 64.25. You know, we're then getting out of our 20-day ATR range low, and we're likely to come down and come back inside to test the 1959 area. Was a former microcomposite, and I'm sorry, naked VPOC. And if we get below that, the big, you know, inside of this range with the high at 1960, everything's going to shift down and coming down and testing the value area right here at 56, but more likely come down and take out the gap at 54.50. And this naked VPOC, microcomposite VPOC, down here at 1952.75. I'm not expecting that to happen today, but we've got to look just in case we get some weakness. I'm more anticipating a chop and trying to hold this, you know, 71 level. But you know, I do. If we break the 71 level, I do see a move down here to, you know, close the gap and test this microcomposite VPOC at 1967.50. So let's take a look at what happened overnight. And start moving our numbers over. So far, we have an overnight high at 1977.50. That was the microcomposite VPOC for the 2-day holiday profile of Thursday and Friday. So our overnight high, you know, this is, and it's this microcomposite VPOC as well. So this is, you know, giving us a better clue that, you know, this is possibly sellers stepping in here at this 77.50 because they've rejected it, you know, on Friday, and then they also have rejected it overnight. So our overnight high is sitting up at our naked VPOC at 77.50. Okay, our close from Friday is 1975.50. Our VPOC is below that, and we have a double distribution going on in the Globex. This is, you know, the inventory overnight is net short. So if we break above the 75 level, we're going to get a whole bunch of shorts that are caught, you know, short in the hole, and they are going to get their pickle squeezed in a major way. So there's a couple ways that we can play this. First of all, we're going to put in our overnight low, which is at 71.25, which is also our range low, okay, from the two-day holiday profile. And then we have that key CLVN at 71. So I'm going to be using this 71.25. It's really 71 to the low side and 71.50 to the upside. So I'll be looking on the open for them to come down and test the 71.25 area, and if they break below the 71 area, then I'm looking for a rotation down to test a couple of the key levels. We can get rid of that. We don't. Oh, I need that for one more thing. Sorry. Our overnight VPOC is 74.25, and I don't think it's likely to change, but we'll keep an eye on it. So taking a look at how this fits. You've got this gap close at 67.75. You've got the microcomposite VPOC, two-day VPOC at 67.50, and the naked VPOC from Wednesday at 67.50. So we've got some really good targets down here. The only thing we have to worry about is this 1969.50. So if you're going to get short, you've got to make sure that you get in, get funded, okay, with the break of 71, but you've got to be funded before the first target at 1969.75. I'm sorry, it's 1969.50. Okay, if we don't hold that, then look for the move down to our primary target. And I'm just going to front run this, by one tick at 68. That's going to be the primary target below range and below value. I just worry about the 69.50. Now, we've got this gap and we've got these wicks. So one of my main hypotheses is, it's not my main hypothesis, but it's my secondary hypothesis, is that if we break the 71 area, that we're likely to get stuck in the wicks down here between 72.75 and the 67.50, and we just mature the auction inside of this area. So that's my primary hypothesis, is coming down and testing and playing ping pong inside of the wicks in here, and we get a really choppy day. If we come down and we do not find responsive buyers down here at 67.50 area, look for them to move down and test the value area low from the two-day price acceptance around 67.50 at 65. That would be my next target and trade area that I'd be looking at below here. And we come down, test the other side of the balance at the CLVN and the value area, microcomposite value area low at 65. And then see if the buyers step in. I'm going to put CLVN there so you can see it as well. If we don't hold 65, then I think we've got some serious weakness coming into this market, and there's really nothing until we get down to the 61.25 area. And then below everything, below 61.25, everything shifts down to this level right here, which is in that, 50, well, you got 59 as the first target below, but I'm really watching. Come on. But I'm really watching this 55 area, because the 55.75 is a very important level for us. It is the larger microcomposite VPOC, larger microcomposite value area high. It needs to hold, okay, or else we're going to get a bigger retracement. So I'm just going to mark that in there at 55.75. And you get the smaller micro composite value area high in the 2 days just before we broke out of balance right there at 56.50 as well. And then the targets below are pretty clear. The gap close and the takeout of the naked VPOC and the microcomposite VPOC in around that 52, 53. Remember, the microcomposite VPOC most accepted price going all the way back to 0526 is this 1953.75. That's why I think if we get below that 56 level, it's going to be a nice trade setup on the short side. Here's my main hypothesis, okay, with it's slightly ahead of this getting stuck in the wicks, but coming down, testing the 71.25, finding responsive buyers, and then coming up and testing the value area low at 73.75. Okay, that is going to be the first target above. So really, we're going to be opening up in the lower distribution, but below value. So we're opening up inside a range, but outside of value. So I've got to expect some initiative sellers stepping in and testing the 71 area. If we hold 71 and the buyers, the responsive buyers come in, then I'm looking for rotation back up to test that value area low. And then if we get inside of the value area, we've got a double distribution day with the first target here at 75, which is the LVN from the two-day holiday profile, but you've got the close, the naked close, just above it at 75.50. So I'll be looking at 75 as the target to test with the with the possibility of holding inside of range and getting back inside of value. Okay, if we get into the upper distribution and we hold above the 75 level, then I'm looking for a move up to take out and retest the two-day value that they tried to hold and the naked VPOC from that profile and the overnight high at 77.50 with the value area high just above it at 78. And I'd be looking for responsive buyers. This would set up a move above 75, basically sets up a really nice trade, which is the 80% value area destination play and a test to take out this test the value area high at that 78.25. But you got to watch for this overnight high and the microcomposite VPOC. That's my main hypothesis, is to get in, to hold inside of the range and test the value area high. The LVN, inside of the value. If we, reject that, we rotate off, I think that we could break out a value, come down and get below the range and play out the secondary hypothesis. I'm not expecting any new highs to be put in today. I think that we come out and we test both sides of this double distribution and possibly test the value area high. If we do break out of the value area high, then we have a destination move up to 83.50. Sorry, measured move up to 83.50. That's our ATR 20-day target to the upside, and then I've got another target up here. What was the cup and handle? The cup and handle was, crap, I closed that down. I'm sorry, it wasn't the cup and handle. It was the 127 extensions up at 1986. This is where I'd be looking for, responsive buyers to step in, sellers, I should say, if we get outside of range and go up and make all-time new highs. And I think if we get above this range from last week, that the continuation up, continues, and we get a move into all-time highs. And I think at that point in time, it's a good conclusion that we're likely to go up and test the 2000 level. And then we've got that daily cup and handle measure move all the way up at 1204. And then I'd be looking, of course, for the rule of 10 to come in at 2004, with the rule of 10 kicking in at 2010. But today, I think we're just going to have two possibilities, testing either side, both sides of the double distribution, or a break below and getting stuck in the wicks down here. If we do break that 65 level, then my third hypothesis comes in and we see aggressive selling coming in and a move down towards this 1960, 1959 area. And further weakness in the trend day would likely step in and we could get a move all the way back down to 53. But I think that's on the lower probability side today. So on the open, watch your two levels. Your two levels to watch is going to be the value area high. Okay, above that, get long into the overnight VPOC and the LVN and the naked close and all the targets above. But if we reject that, get short for a move down to test the 71.25. But watch to see if the responsive buyers step in at 71.25. So, you know, we basically got our two levels to trade off of. Anything inside of this is dangerous. Don't try to be a hero and try to get into the market, you know, inside of these two levels. Use these as your guidance, above or below, and with clearly good targets. It's 9:11. Do I have time? Yeah, let's do that. I'm just going to bring up the my hypotheses for the Russell. You know, we opened the week at 12:0240 after touching the overnight high at 12:03. We've been bleeding off ever since that. Okay, our close on Friday was 12:0180, and we're, you know, at the time of writing this, where are we trading right now on the Russell? So we're trading at 1198. I better bring up the charts. Let's do it this way then. All right, so we have an overnight high, overnight low down here at this 1197.70, which is part of my hypothesis, but it already played out. So we've got an overnight low at 1197.70, which is basically right at the range low from the two-day holiday profile. We're currently trading at 1198. We've got a key LVN in the Globex here at 1199.20. So I'll be using the 1199.20 as a guide. Okay, if we get above that, then I'd be looking for a move into the overnight VPOC up here at basically 1200 as your first target, and of course a test of the HVN, you know, from the lower distribution, and then above that you've got the LVN at 1280, and then the value area low here at 1201.10, and that's where I'd be looking for, you know, possible resistance to come in between this LVN and the value area high. Inside of the value area, then look for the gap close, and your first target above is going to be the gap close here at 1201.80. And then the profile on the Russell was a triple distribution day. The other LVN is right here at this 1202.60 with the Friday open at 1202.60. So I'd be looking at that as a trade area as well. And then above that, you've got the overnight high at the IB high from Friday. So I'd be targeting that just in front of the naked VPOC. So I'd be targeting this 1203 area. In fact, if you're long and we break above 1203, you could probably even do an add, because likely to blow through this value area high, I can't talk today, the naked VPOC at 1203.50, and likely get a destination trade up to the value area high at 1204. and then I'd be looking for responsive sellers to step in. Above that, whoops, got to bring in our composite. Above that, you've got the value area high from the 4-day microcomposite at 1205.70. So a break above that. I don't think the 1204.60 is going to hold. I'd be looking for the 1205.60 as your first target and trade area above range and above value. Come on. 1205.60. And then once we're above that, there really isn't much to hold us down until we get up into that 1210.70 area. So 1210.70. And at this point in time, I would not even think of considering of trying to short this, because you've got the all-time high between the June contract and the June and the September contract, and that was at what was that? 1212 what? 1212.70. And then I'd be looking for continuation higher. So my main hypothesis for the Russell is to hold this 1997.70 and rotate back up into the lower distribution, take out and test 1200. If they can get above 1200, I'm looking for them to come in and start chopping around in this 1201 to 1203 area. If we break below the 1997, you've got two good targets below, so a breakout trade below the 97.70 and take out of the overnight low would be down at this 1196.40 gap close, and just below that you've got the 1195.90, which was the prior microcomposite VPOC, and the CHVN right here, with the other side of balance being down at this CLVN at 1192.80. There's really not much down there. We're likely just to chop around this 1195.90 area until we get that. Below 92, everything shifts down to testing the range high here at 1189, but I'm really watching the 1188.70 because that is the 1188.60, I should say. That's the naked close there. But I'll be looking for first responsive buying to step in at 1189.60, the range high. So I'm going to put 89.60. And then below that, you've got clear targets. So I'm not expecting a big move like that today. Again, I think we're likely to come down and chop around this 95 distribution zone if we break below and stay outside of value, outside of range. But if we hold this range, I'm expecting at least two of the distribution zones to be tested on this triple distribution day. Let's take a quick look at gold, and then we'll wrap it up. Gold is come right back down into balance and is trading around what is the current microcomposite VPOC in around this 1315 area. The value area low for this is 1170, but as you all know, I'm watching like a hawk at this 1307, and I'm going to trade off of this 1307. If we break it, I'm getting short, and I'm going to look for a move down to test that 1300, 1299 CLVN, but I'm really looking for a destination trade down here to this 1293. If we come down and hold this 1307, then I'd be buying and looking for rotation back up towards 1311.70 and the 1315. My trade above is going to be above the value area high and the CLVN basically at 1323, and if we get above that, the first destination is 1327, but I'll be watching this 34, and of course this big one up here at 1346. I think we're going to see more chop. I'm thinking the fact that they had trouble breaking out, and I don't think we're going to break down on the indices as quickly as everybody thinks we're going to. I'm looking to the short side with the break of this 1307, but I have to trade what the market gives me. Anyway, that is going to complete our morning market analysis and trade plan setup. As always, trade well, trade safe, and we'll catch you on the flip side. All right, so that takes care of the recording. I'm going to get it set up now. I'm going to keep the room open and see if we can find some